There is no doubt that the mechanisms like BRICS Bridge would be useful for China, Russia, or others to hide sensitive transactions from Western authorities. The underlying technology is a tool to circumvent sanctions and potentially undermine the dollar's dominance in the global financial system. The hubris I find to be distasteful. And at the same time, you have the BRICS come out completely reiterating their commitment to enhancing financial cooperation and cross-border payment solutions in a cooperative manner.
But I do think that if, let us say, we had a repeat of the 1933 confiscation episode, then I think that would just drive the price of gold far higher in the paper currency that is doing it. I mean, it would just alert everybody to what's going on.
For over 80 years, the US dollar has reigned as the dominant global reserve currency, cementing America's position at the center of global finance. However, the BRICS nations, Brazil, Russia, India, China, and South Africa, are increasingly pushing to reduce reliance on the dollar. At the 2024 BRICS Summit in Johannesburg, leaders highlighted their intent to shift toward a more multipolar financial system. Russian President Vladimir Putin declared that the movement toward de-dollarization is accelerating. At the same time, Brazilian President Luiz Inacio Lula da Silva emphasized the need for alternatives to the dollar, reflecting the growing sentiment among emerging markets. A key aspect of BRICS strategy is the development of financial systems that bypass Western infrastructure, particularly the SWIFT payment network. One such initiative is the BRICS Clear system, which allows member countries to trade among themselves without using the US dollar. Andy Schectman highlights this as a significant step in reducing reliance on the dollar, with the system potentially evolving into something akin to a gold-backed currency standard. While this system offers emerging economies a chance to mitigate their dependence on the dollar, it also reflects a broader shift toward de-escalating reliance on Western financial intermediaries. This move signals a changing global landscape, where countries like China and Russia are positioning themselves to reduce the dominance of Western financial systems and exert more control over their economic affairs. BRICS countries are increasingly moving towards using local currencies for trade, reducing their reliance on the US dollar. Russia and China, for instance, have shifted to using rubles and yuan for bilateral transactions, while India and the UAE have started settling deals in rupees. This trend offers some protection from dollar fluctuations, but introduces challenges like limited convertibility and the need for reserves in multiple currencies. Andy Schectman points out that while the shift holds promise, practical hurdles such as India's capital controls complicate the process. Despite these challenges, BRICS countries are pushing for a more integrated financial system to reduce dependence on the dollar and increase financial sovereignty. Now, we present the clips of Andy Schectman's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
I think it's disingenuous to say that Putin would be the only one to benefit from the multipolarity, when it would really benefit all of these developing nations that want to use Bridge to trade a basket of local currencies, which would only strengthen their own economies. I think that it's very interesting that you had a meeting last week in Washington where the BIS was there with the IMF and the World Bank and all the Western policymakers. I think they got a little concerned about what was happening. And you get Augustus Carstens, who kind of looks like the kid from Willy Wonka, Augustus, and he says, and it's really gross. I mean, I'm sorry, I find it to be distasteful because they've spent all this time together. At the 12th hour, he comes out and says, we cannot directly support any project for the BRICS because we cannot operate with countries that are subject to sanctions. I want to be very clear about that. And Agatha Demarius, a senior policy fellow at the European Council of Foreign Relations. In the long run, there is no doubt that the mechanisms like BRICS Bridge would be useful for China, Russia, or others to hide sensitive transactions from Western authorities. The underlying technology is a tool to circumvent sanctions and potentially undermine the dollar's dominance in the global financial system. The hubris I find to be distasteful. At the same time, you have the BRICS come out completely reiterating their commitment to enhancing financial cooperation and cross-border payment solutions in a cooperative manner. I think as Steve had mentioned, you had an overt, almost in a marketing sense, drive to show that Modi and Xi Jinping are addressing their border issues. You had Saudi Arabia and Iran announce joint naval exercises. They're showing that cooperation is something that they're interested in. So, there's something called BRICS Clear that James Rickards talks a lot about. I would suggest people read that article where he basically says that this will be a ledger for these BRICS nations to trade back and forth with one another, free from the Western intermediation or the SWIFT system, and to settle monthly or quarterly on a net basis, not on a gross, where if Russia trades oil with for India for technology, those two things will offset, and then once a month or once a quarter, they will settle through the commercial banks that are participating and take the excess, the proceeds, whether it be due to a trade imbalance or whether it be, I just have too much in the way of ruble, I don't want any, and buy gold with it. He basically is saying it is a de facto gold standard, just without the pegging. What it is to me is they have, I think, really, this will reinforce and crystallize their motivation to break free from the West, and it won't happen overnight. But this is just a very underhanded way of doing things, where he says, I want to be very clear. Well, where were you a year ago? Where were you 2 years ago? And you bring it up now, it's transparent, it's gross, and there's probably a lot more to it that we don't understand, but I don't think it bodes well for the trustworthiness, which is something that is already lacking in this system, a lack of trust, as Putin said.
Many look to gold and silver as potential safe haven assets, as the US dollar faces increasing pressure from inflation and growing global instability. Financial analyst Alasdair Macleod asserts that if the US dollar were to lose its dominance or face a severe collapse, the historical role of gold as a store of value would become more evident than ever. In such a scenario, individuals would likely turn to precious metals to protect their wealth and acquire valuable assets, such as real estate, that would be out of reach in a devalued currency environment. While some fear that governments might set maximum prices for gold or even try to abolish its free market value, such actions could likely spur even greater demand. Historical examples, like the US gold confiscation in the 1930s, show that efforts to restrict gold ownership only led to heightened interest and the rise of underground markets. While a total ban on gold seems unlikely, the ongoing shift away from the dollar and toward precious metals highlights gold's enduring role as a vital asset, especially in a world questioning the stability of fiat currencies. Let's now watch the clips from Alasdair's video.
Deploying gold, I think basically she is right, because if, let us say, fiat currencies collapse in their purchasing power, then you don't sell your gold for currency so much, but what you would do is you would use gold to purchase assets. You'd probably use silver to purchase day-to-day, sort of, if you like, the things we need to live on, like food and all the rest of it. It is interesting. I mean, I often quote something from a book by an Austrian author of renown called Stefan Zweig, who recounted that in the German inflation in 1922-23, you could have bought a property, a six-bedroomed house, swanky part of Berlin, for $100. Now, I don't know how many zillions of paper marks that was. I mean, I'm sure it was huge barrow loads of paper currency. But the point is that was the equivalent of just under 5 ounces of gold at the time, because the exchange rate, the gold exchange rate with the dollar was $20.67 to the ounce. I think she is right in the sense that you would use your gold to purchase assets, because the effect of a collapse of the currency is completely to destroy the value of assets, and even property values will go down. Bear in mind that everything we deal in is credit. I mean, even under a gold standard, people never used gold in transactions. It was always credit The difference was that credit's value was tied to gold. You had a lot more stability than we have when it is not tied. What they could do is go back onto a working gold standard. And under those circumstances, that then becomes the value in your own currency. But I really think we're a long way away from that. Perhaps a better question might be, is it likely that governments will ban gold ownership? I mean, it would be a very stupid thing to do, but I wouldn't rule it out, because governments tend to do things which are politically demanded rather than economically demanded. But I do think that if, let us say, we had a repeat of the 1933 confiscation episode, then I think that would just drive the price of gold far higher in the paper currency that is doing it. I mean, it would just alert everybody to what's going on. And I do remember when we had suddenly in this country, I think it was back in the 60s, we were banned from acquiring sovereigns, which is a coin of the realm, for goodness sake. And what then happened was that, you know, as far as the dealers in sovereigns are concerned, the price went bid only. In other words, there was no stock on offer. And if you actually wanted to get some sovereigns, it was extremely difficult. I mean, it just went underground like that. It was Gresham's law. You know, the bad money was driving out the good completely. So I think that's probably something which she might just bear in mind.
While the BRICS expansion continues to build momentum, the dollar's liquidity and established infrastructure keep it firmly at the center of global finance. The drive for a multipolar system may be underway, but meaningful shifts away from the dollar will likely unfold gradually over a long period of time. The greenback will remain influential in the foreseeable future, and any significant challenge to its dominance remains decades away. However, alongside this, gold continues to assert itself as a reliable safe haven asset. In times of geopolitical uncertainty or financial instability, gold's historic role as a store of value ensures that it remains an attractive option for investors looking to safeguard their wealth. How do changing geopolitical dynamics and financial systems impact the future outlook for gold and silver prices? Please share your thoughts in the comments below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.